We have one good answer from Vinish. Okay, I just told you the rule, like it is your cost, but that is your replacement cost as well. IAS-2 only talks about the cost element. You have to record your inventory at cost or NRV. There is a no concept of NRV. We don't have any data for NRV in this situation as well. So what should I do? I should record my inventory on $12,000 and not on $10,000. Why? Because $10,000 is my replacement cost. That is my replacement cost. But IAS-2 only deals with your cost and not with your replacement cost as well. So these are some sort of little bit technical points that you should be aware while you are dealing with advanced level questions as well. So that is your answer. Raw materials are not written down below cost. If finished good, they will be sold out at a part of profit as well. So inventory should be valued at a cost of $12,000 as well. That was the just rule that we studied few slides ago. Now let's look at another example as well, and I expect you people to solve this example, but let me read out the data for you. Again, the requirement is same. In accordance with IAS-2 inventories, at what amount should the above items be valued? So what amount should I use for valuation? Equipment constructed for a customer for an agreed price of $18,000. This has recently been completed at a cost of $16,800. It has now been discovered that in order to meet certain regulation, conversion with an extra cost of $4,200 will be required. So initially you have incurred $16,800, your product is being complete, but later on there are some new rules, some regulations from government authorities, and now you have to incur $4,200 additional cost as well. The customer has accepted partial responsibility and agreed to meet half of the extra cost as well. So that is our question, that is our relevant data for this question. And now I expect you people to solve this question. Just take 5 minutes time, and then we are going to discuss this question as well. So I expect everyone to participate in our class. We have one answer, and that's fine. We will solve it and then we will have the answer. Another person who is going to share his or her answer? Otherwise, I am going to solve this. Okay, let's solve it out basically. Again, the requirement is same. We have to record it at what amount basically. Initially, your agreed price is $18,000. So you can say your selling price is $18,000. This has recently been completed at a cost of $16,800. So your cost was $16,800. It has now been discovered that in order to meet certain regulation, extra cost of $4,200 would be incurred. Customer has accepted partial responsibility and agreed to meet half of the extra cost. So our extra cost is $4,200. If I take the 50%, so then there comes a figure of $2,100 basically. So that is $2,100. That would be my extra cost as well, that I am going to incur this basically. So at what amount should I recognize the above item? What value should I use for these type of item into my financial statements basically? As we already know, like we should record it, we have a rule, cost versus NRV basically. Here the cost is 16,800, and now it looks like your NRV is 18,000. No, It is not 18,000. It was earlier 18,000, but now we have additional cost of 2,100 basically. So now in that case, my NRV is 15,900 basically. You can say your selling price, your revised selling price, your NRV is 15,900 basically. 15,900 is your NRV. Your cost is 16,800. What you should choose it out? Definitely, I should choose 15,900 and I should not choose 16,800 basically. Let me explain you again. There might be a question like why I have not added this 2,100 into my 16,800 basically. Again, look at very careful. This has recently been completed. That's why I just highlighted this. It has been completed. So if it has been completed, definitely you cannot add 2,100 into your cost because cost is already being incurred. Your product is complete, but later on there are some regulations, some new rules. Already customer was not aware of these new rules, company was not aware because it is legal requirement as well. So that is not my fault, that is not a fault of customer nor a company. So what they are doing, they are just sharing this additional cost 50-50. So company is going to reduce its share. Earlier we are going to receive 18,000, but now they are incurring 2,100, so they would be receiving 15,900 basically. So your NRV is 15,900, your cost is 16,800, and I have to record my inventory at lower of that would be 15,900 and not 16,800 basically. So that is your solution basically. Contract cost is 18,000, share of modification 2,100, net realizable value 15,900. Again, NRV is 15,900, that is below cost of 18,000. So it should be recorded on $15,900 basically. So you should remember, you should participate in small technical points because overall these technical points matter a lot while you are solving your financial reporting question, your auditing question, and so on, basically. So that was the example. That was the second example for our IAS-2. Now, if you look at the disclosures, basically, because it's a very small standard. So for inventories, we should mention the carrying amount of inventories, basically. If there are multiple categories, so we should mention the carrying amount of inventories with respect of their categories as well. So if we are going to record our inventories on NRV net realizable value, so we have to provide the details of inventory which are being carried on net realizable value as well. That is NRV. So we have to mention the carrying amount of inventories by category. We also have to mention the NRV of those inventories that are being carried out, how they are being carried out, and what were the circumstances, what were the situations basically. So that were the disclosures of our IAS-2 as well. If anyone has some question, definitely we will be happy to assist your question. Good luck and thank you.